from open to close yesterday, again, negating what happened in the middle of the day, the market actually opened above the 20-day moving average and closed above the 20-day moving average. So that's actually positive. And again, that keeps that bullish trend intact. Let's talk about what you need to know before the bell this morning. Yesterday, market started off fairly strong, sold off, actually got flat for the day. And then right in about and we were trading well below the 20-day moving average yesterday. And so we talked yesterday that we had broken this 20-day moving average. And what was important is that the market needed to recover that before Friday if it was going to negate that break of the 20-day moving average and set up for maybe a further decline towards the 50, which is not far below where the 20-day is. It's very close. But right at the end of the day, we had this nice buying spurt that came in and pushed markets higher, got back above the 20-day moving average. In fact, from open to close yesterday, again, negating what happened in the middle of the day, the market actually opened above the 20-day moving average and closed above the 20-day moving average. So that's actually positive. And again, that keeps that bullish trend intact. We'll see what happens today. Again, markets really aren't doing a lot because everybody's kind of waiting for Friday's employment number. But right now, we continue to see, this kind of the buy the dip mentality. Every time we have a pullback, people are stepping in and buying the markets, and that's been just this consistent activity. But as we've talked about, it's not really moving the needle much in terms of either relative strength or momentum. Those continue to remain relatively weak because the market's really just not going anywhere, and it hasn't been going anywhere now, despite all kind of the movements that's been going on in the markets. We haven't really made a lot of move in the overall markets because over the last week or so in particular, as this has been going on, the market has just been trading sideways and just have not really made any progress. And this progress really kind of runs all the way back to really kind of the beginning of August. So again, despite all the activity that's been going on and kind of all the the headlines and at least the feel that the market is doing very, very well, the market's just really been traveling sideways here. And again, this is why we're seeing this decline in momentum. We're seeing this decline in relative strength. The overall trend remains positive, which is why you're now picking up this negative divergence in relative strength and momentum. But again, just over the last few weeks in particular, the markets are really just kind of trading up and down, not making a lot of advance. The issue with that, and as we continue just to kind of reiterate, is that that's the type of activity you see when the market's trying to slow its pace a bit, and potentially this type of activity you see before a potential pullback. So again, when we're talking about pullback, we're talking about 3-4%, nothing major. So we're not talking about a major correction here, but it's enough of a process that again gets the markets into a better position to add equity exposure to portfolios. We're not quite there yet. We're still kind of working through this process. But again, the longer that we can just travel sideways here, work off this overbought condition that we had previously, it'll give you a better opportunity to add equity exposure to portfolio. But just for right now, though, just be a little bit cautious. One other thing just to kind of keep a watch on, a few weeks ago, we talked about gold being very oversold and that it was kind of getting into a good position for a tradable rally. And as we noted back then, that really oversold condition and this long consolidation was setting up gold for at least a bit of a tradable rally. And we had that really over the last few sessions. Gold has done very, very well, but we're now back to extremely overbought conditions. So again, if you picked up on this trade, for gold, it's at least worth considering taking a bit of profits here because again, once you're back up to these levels historically, that has been where basically you get some corrections in the price of gold. So again, just kind of a good place. Again, kind of the opposite of the market right now. The market's getting set up for an opportunity to add exposure to equities. This is a good place to just take some profits in gold and wait for the next pullback. Because again, when you're this overbought, typically you get some type of pullback in gold and gives you a better opportunity to add back to that position in the future. So that's what you need to know before the bell this morning.